So who is a proof of reserves ideal for? It's ideal for any type of company that holds those assets on behalf of customers. So that can be exchanges, that can be custodians, that could even be stablecoin issuers, that can be ETFs. Whether we like it or not, crypto is a trust problem. While the potential of blockchain and digital assets is immense, the industry is often overshadowed by scams, frauds, and bad actors who have left a stain on the whole industry's reputation. For crypto companies trying to prove their legitimacy, it's an uphill battle, with regulators, customers, business partners, and even banks seemingly scrutinizing every move. Today, we're breaking down reporting options that can help you establish trust as a crypto company in the crypto space, from essential SOC reports to proof of reserves, and everything else in the crypto company's transparency stack. If you're looking to build a resilient, credible crypto business, this is an episode you can't afford to miss. Welcome to TNF Takes, the go-to spot for crypto companies and on-chain organizations. Before we dive in, make sure you hit that subscribe button to continue getting top-tier content for your crypto company or on-chain organization from industry experts who have been around the block. I'm Jeremy Nau, and I'm here with Noah Buxton and Nick Ward from the network firm. We're here to help establish trust, build efficient crypto operations, and stay ahead of the curve in the ever-evolving industry. Nick, Noah, how are you guys doing today?
Never better.
Doing well, yeah. Hey, guys.
Good stuff. Well, crypto companies seem to do countless things to build trust. CEOs appear on podcasts. They'll run Super Bowl ads, roll out all sorts of promotions. But the line between marketing and genuine trustworthiness often blurs. These marketing activities might make the public CEOs relatable or a major player, but they don't actually satisfy the due diligence requirements of big customers, regulators, or banks. That's where third-party reporting becomes essential. An independent party coming in and verifying your business, staking their own reputation and credibility on the output. Over the years, organizations like the American Institute of Certified Public Accountants and ISO have developed rigorous standards and reporting frameworks to help companies demonstrate reliability in financial reporting, security, custody, and more. Heck, there's whole professions dedicated to providing this type of assurance and trust, like certified public accountants and security professionals. Regulators, businesses, and even lately customers acknowledge these exercises are extremely effective in ensuring the company that you're doing business with is legit, or at least much more than providing assurance that a Super Bowl ad can do. So that's why third party is one of the strongest ways to build trust for your crypto company. So without further ado, let's dive in to some of the most effective third party reporting types that your crypto company can use. We've got Nick and Noah here. They've been doing third party assurance reporting for collectively over 20 years. Nick, Noah, we want to dive in and be able to provide our listeners with some of the reporting types that they can leverage to build trust. Noah, you helped start a SOC reporting practice at your previous firm, and I know there's a couple different SOC reports out there. First of all, what is a SOC report to begin with? And, what is that? The first one I would suppose we start with is a SOC 1. What is a SOC 1? What's the goal? Who's it ideal for? And who benefits?
Yeah, first I would just add on a little bit to what you were saying there in your intro is, people understand or they know about CPA firms, they know about accounting firms generally, but they often don't know all of the capabilities or typical types of services that CPAs offer. And they're actually myriad, right? There's many services that CPAs offer to other industries, right? That are traditional ways of building trust, building compliance programs, building third-party reporting. And so a lot of these things actually apply to crypto companies. Sometimes they apply really uniquely, but they're really important avenues for you to build a compliance program. And so I think this is really good. I'm looking forward to this session, right? Because I think we can help people understand all of the potential services that a CPA firm or an auditor can provide. It's not just financial statement audit, right? It's not just bookkeeping, for instance.
Yeah.
So, yeah.
That's a great point, Noah. Typically auditors they think they do CPAs do taxes for the most part, but there's actually so much more to it. So yeah, what's actually very popular reporting style or reporting output is that SOC report, right? So
Exactly.
if we were to start with a SOC report, explain what that is to our listeners.
Sure. This is one of these SOC report is almost like a buzzword. A lot of people know about it, but don't, or have heard the term before, but actually don't know all of the nuance to it. So you asked about SOC 1 to start. So a SOC 1, really the goal here is to assess the effectiveness of internal controls relevant to financial reporting at a service company. So think of yourself as a service company. And these are really ideal for many different types of companies, but financial institutions, digital asset platforms, potentially third-party administrators, software providers, any platform that you have that has the activity on the platform has an impact on the financial statements or the accounts of your customer. This is a key report because it deals with the completeness, accuracy, and timeliness of the information that makes it into the company's financials. So the stakeholders benefited here are, of course, your customers or your clients, potentially your shareholders as a compliance program builds, and even regulators, potentially look to these reports for, informational and oversight reasons. And these are provided, again, by CPA firms or their international equivalent, adhering to really best practices as well as the standards that you mentioned, right? AICPA has a set of standards specific to SOC 1 and SOC 2 reporting, and there's an international equivalent as well through IFRS.
Yeah, thanks, Noah. Another one that I always see is payroll providers, right? Because that reporting from those payroll systems directly affect the journal entries on your GL and then eventually hit your financials.
That's a great example. That's one I always go back to. I'm trying to help people get their mind around this because almost everybody's gotten paid through a payroll company, right? So they can kind of put themselves into the example and kind of understand. Payroll becomes an incredibly complex processing, and there's a lot of need for accuracy. Of course, you want to get paid the right amount. You want your taxes to be withheld properly. You want your expenses to be, sort of calculated and reimbursed correctly. Every time that sort of happens to the end employee, right? The accounting of the company, right? This is information that goes into the books and records of the company. And so when an auditor comes in, right, they'll say, okay, let's look at the payroll account or let's look at some expense accounts. Well, if all of that ran through tax withholdings, et cetera, if all of that ran through a payroll service provider, the auditor will ask, okay, show us the payroll company's SOC 1 so that we can get comfort over this account and we won't have to dive as deep into the testing potentially. Either they're going to have to say, oh, we can't rely on the payroll company's information and we're going to have to go through and deeply test it, more samples, more inquiry, or they can rely on that SOC report and say, okay, ADP or JustWorks or something like that right there. The information that made it into the financials is reasonably accurate, and they can start there with their testing.
Yeah, so if you're a crypto payroll provider, definitely something to look into. Another big one would be exchanges, right? Because your clients are often relying on your account balance information and account statements that are being output from your system. So if you have a SOC 1, it can really provide a lot of assurance to your stakeholders.
Payment processors.
Payment processors, certainly.
And then those software platforms that offer, either crypto accounting subledger activities, right? So deal with all the crypto and roll it up into the financials, or crypto tax, the ability to calculate cost basis, gain and loss, income on tax or crypto transactions. Those are another type of provider that have looked to SOC 1 to build this level of trust.
Yeah, and I know we've talked about SOC 1 up to date, Noah, but I want to go back to the exchanges because usually for the exchange, of course, SOC 1s are important, but I've also heard of SOC 2s being really important, particularly for exchanges. Can you tell us what SOC 2s are, what the goal of that report is, and who can benefit from that type of report?
Yeah, when people reference SOC, this is actually usually the one that people are referring to. This is sort of the most commonly referred to report. The goal here is to confirm or test internal control at a service organization relevant to a few different things: security, availability, processing integrity, confidentiality, and potentially privacy as well. These are ideal for technology firms, SaaS companies, potentially digital asset platforms. And this is because it's a focus on security, privacy, confidentiality, how the system operates to protect those principles. And then the stakeholders here that are benefited, similar to the SOC 1, right? It's going to be your customers, potential partners, certainly investors as the compliance program grows, and that's good for market share, and regulators as well. And these are, again, typically provided by CPA firms and or certified information security professionals. In the case of the international equivalent, often provide these.
Yeah, it is. I mentioned exchanges, and is the reason this SOC 2 is so valuable for exchanges because of that security component and potentially covering controls over private key management and just custodial arrangements related to the digital assets. Is that the connection there?
It could be. Yeah. The scope of a SOC 1, is between the auditor and the client. And so it could cover scope like private key management and custodial operations. It doesn't necessarily do that. And so obtaining a SOC 2 report and being able to review it for the actual coverage of those controls, the scope of the report, and the description of controls, which is a narrative portion at the top of the report, which describes everything that's covered and the control environment generally. That's where you would look to see if it covers that scope. But generally, yeah, I mean, I think we saw some exchanges early on. I think this was probably now 4 or 5 years back. I think, for instance, Gemini got a SOC 2. And I remember that was a big push for them to show, hey, we are building a control environment around the customer operations, the trade and custody that is robust, right? That was a signal to the market and to their partners that they were trying to do things the right way.
Yeah, that's a great point, that Noah, is that actually looking at and reviewing the SOC report to see what it covers. I think that's pretty key, because I think so many different parties, it's just to check the box, right? But who knows, it's even covering those key areas that you think it is.
Yeah, exactly. One other quick thing I forgot to say. So like SOC 1 has an international equivalent, if you're not based in the US, you're not, your operations aren't really focused on US customers, there is an international equivalent for SOC 2 as well. Typically people look to ISO 27001 is typically the report there. If you put sort of the SOC 2 trust services principles, as they're called, those are issued by the AICPA, the American Institute of Certified Public Accountants. That set of criteria, or that set of trust principles and controls, if you put that next to ISO 27001, they map together pretty well. So they're not directly equivalent, but they cover generally these areas of security. One more thing to know. Yeah, one more thing to know on this is that SOC 2, I like to describe it sort of like going to a buffet. So it's an optional, there's parts of this that are optional. So any SOC 2 at a baseline has to have security. And that's, again, you want to look to these reports or understand, if you're trying to obtain one of these reports from an auditor, which principles should you be including? So security is kind of like the plate to the buffet, right? You buy your entry point, you got to have your plate, and then you can kind of put on whatever you want a la carte from there. So availability is a principle typically used for SaaS companies, right? High uptime is sort of the goal here. Processing integrity, not often used, but can kind of bring in some of these SOC 1 type of principles we talked about, like, is the system computing things completely and accurately? Confidentiality, another very common principle used, and deals with, of course, the confidentiality of the information stored within the platform. And privacy is a relatively new still principle, but deals more specifically with information related to individuals, right? Natural persons that have specific personally identifiable information within the system, within the service provider system.
Well, that's really good stuff, Noah. Thank you. So it sounds like SOC 1s and SOC 2s are relevant for a lot of different types of crypto companies. We talked exchanges, crypto payroll service providers, subledgers, perhaps even stable coins. There's so many different types of use cases and parties that can benefit from SOC reporting. So I appreciate the background there. I do want to move on to the next potential type of report that crypto companies can benefit from. And I think a lot of us are familiar, or at least have heard of this type of report, and that is the financial statement audit report. Nick, you've been doing financial statement audits for close to a decade now. Can you give us the background as to the goals for a financial statement audit, who can benefit from them, and who provides these types of reports to crypto companies?
Yeah, absolutely. So at the onset, the goal of financial statement audit is really just to take management's financial statements, which essentially are your balance sheet, income statement, statement of equity, cash flows, and then the disclosures. And an auditor is going to come in and make sure those are essentially reported fairly and accurately. The technical term is free of material misstatement, right? So auditors are going to dive into accounts, assess the risk of your company to say, all right, where are the risky areas? Where are the important areas for the users, right? So if you're a stable coin issuer, one of the most important areas will be over your reserves and ensuring that you've got that backing. An exchange might be revenues. And they're going to, again, come in, do some sampling, test, meaning, really prove out that these transactions occurred and they're being reported accurately. This is ideal for companies that are starting to scale. Anyone who's in this space likely was at a startup at some point, as we're a pretty new industry. And you get through those first couple of years, you want to maintain the best records you possibly can, but you're also trying to grow the business. So you may be moving quickly, and when it comes time for this audit, it's really to help pause and say, all right, do we have good record keeping practice in place? Are we reporting things accurately? Let's get that third party to come in and beat us up a little bit. Some other areas that it's going to be good for is if you're preparing for licenses. So, money transmitter licenses are one of the most relevant to our industry. Essentially, anybody that's going to take fiat and allow you to exchange it for crypto is going to need this license. And so part of getting that license is getting a financial statement audit. So, many will go get that first audit when they're going for the license, and that's okay. But if you have the opportunity to just start it ahead of time, always smoother sailing if you've had one under your belt, because that first audit is going to be pretty invasive to your team, because you're going to need your team's time with the auditor. As Noah mentioned, for the SOC, same for financial statement audits, there's going to be inquiries, testing, all those things. Some other areas will be if you're preparing to sell your business. Maybe you haven't needed an audit, but you're ready to unload. You'll get an auditor in there to help show the market that, hey, these books and records are accurate. They're reflecting things fairly. And then you move into where there's requirements, right? So obviously any publicly traded company is going to require an audit. If you're going to IPO, part of that requirement to IPO is that you have a couple years of PCAOB specific audits. So we've talked about the American Institute of Certified Public Accountants. They generally set the rules, and those are the standards for private companies. The PCAOB is the Public Company Auditing Standards Board, and they're who set the rules. They're under the SEC, and they set the rules for those public company audits. And so again, you'll need a few years of audits under those standards. And then, as I mentioned, the MTL license, money transmitter, if you have that, you're going to require audits. The stakeholders benefit. One of the nuances of audit, a little different than the SOC reports, is generally companies aren't putting their financial statement audits out into the public if they're not a publicly traded company. So who those audits are really for are their investors, shareholders, and regulators, and then maybe even business owners, right? If you've got a business owner who's hands off, they may want the audit to come in and get some peace of mind that things are operating.
Yeah, that's a great point, Nick. And I think oftentimes crypto companies don't realize how much work there is that goes into financial statement audit, especially if they've maybe hired, a part-time bookkeeper to run their financials, or have just a staff accountant. Oftentimes there's more that goes into it that, a wider team might be required to help get through. You might need to hire consultants to perform an audit readiness process for you, or look to expand your team, right? Or at least have a preparation phase that is a little bit more detailed prior to the auditors coming in. Because if they come in and things aren't ready, they're going to have to basically look at all the things and tell you what's wrong. And that's going to cost you a whole lot more money and waste a lot of their time and your team's time. So definitely recommend a preparation or a readiness phase before diving headfirst into a financial statement audit.
Yeah, absolutely. You want to be as ready as possible, just again, for your own team's time's sake. And then one of the good news we didn't mention too with the financial statement audit is the auditors, part of their process is going to be to take a look holistically at your operations, your control environment, and give you recommendations, right? They're going to call out, hey, we've noticed some weaknesses in processes here. Maybe there's lack of segregation of duties, meaning the same person who's Determining what bills to pay is also cutting the checks without oversight. So you're going to get a good benefit as a company from the auditors of, hey, here's the things we need to work on. Here's where things could go wrong. Here's where we're susceptible to fraud within our organization. And so again, that process is really going to help build some trust with those stakeholders we talk about, but then also just make you better as a
Yeah, great point, Nick. Well, thank you. I think that's really, really helpful to understand some of the core concepts of financial statement audits. I do want to dive into another type of third-party report vehicle, and that is the now much more popular proof of reserves attestation reports. Proof of reserves is actually a relatively new type of reporting style. It was first theorized back in 2013 after GOX by some Bitcoin developers. I believe it was Greg Maxwell, Peter Todd, and a few others. After GOX, they were, thinking about how can we actually prove or demonstrate that an exchange or an issuer hold assets to cover all customer liabilities. So that's how proof of reserves was born. Then in 2020, CPA firms and other types of chartered accountancy firms started to adopt this and building reports of their own using that proof of reserves framework. So really the goal of a proof of reserves is to ensure an issuer, an exchange, a custodian, anyone who's holding assets on behalf of their customers has assets that are in excess of the liabilities that they owe to customers. So how this might look like for an exchange is that you should have more assets in kind in custody than than how much you owe your customers, usually tracked on your internal database of when you sum them all up, all of your liabilities as tracked on your database compared to those assets actually held on chain. There should be enough assets to sufficiently cover those liabilities. So who is a proof of reserves ideal for? It's ideal for any type of company that holds those assets on behalf of customers. So that can be exchanges, that can be custodians, that could even be stablecoin issuers, that can be ETFs, that can be RWA issuers, that can be gold-backed token issuers. In each of those situations, there's an issuer that's holding assets on behalf of those customers and issuing an IOU or issuing a liability to those customers. So who can benefit from this? Well, what's nice about proof of reserves is that they're typically publicly distributed reports. So it's really for you, the retail customer. And that's what's really different about proof of reserves versus these financial statement audits is that you don't see the financial statement audit, but you can see this proof of reserves. And in even some cases, you can participate in validating that your account was included in the whole attestation process. That's what the Merkle tree is for. So who's providing these proof of reserve attestations today? Well, there's certified public accounting firms, chartered accounting firms, and then there's even some security firms that kind of melded from smart contract audits doing proof of reserve attestations as well. So we think these are kind of the future of a new type of reporting that's caught on over the last decade. I'm pretty interested to see how standards and this budding industry norm evolves, because right now most exchanges are actually doing it themselves, right? But not including a third-party attestation provider, but some are, right? So that's and now regulators are starting to demand it in such jurisdictions like Wyoming, Texas, Dubai, and others.
Yeah, I think we're going to do a session, sort of a deep dive on proof of reserves and just get in even deeper on those topics. But real quick, if people ask you, we just talked about financial statement audit, then we talked about proof of reserves. If someone asks you sort of how do you compare and contrast these things? How do they relate to each other? Is one a replacement for the other? Like, how do you think about that?
Yeah, the way I think about proof of reserves versus financial statement audit, the first thing to consider is a scope. So the financial statement audit typically is related to operations of the whole business. So your revenues, your payroll processes, and hopefully it does include the customer assets, but it doesn't have to, because those can be off balance sheet sometimes. SAB 121 changes that for public companies, but for everyone else, oftentimes they're not the focus or the area of high scrutiny for these private companies. So a proof of reserves is really focused on the customer assets and liabilities, and the financial statement audit includes kind of the other operations of the company, and hopefully it does include that, but sometimes it doesn't. That's just one key area, but proof of reserves can be done more frequently. If you think about stablecoin attestations, those are done monthly or even real time. Financial statement audits are, annual. We talked about the distribution between kind of privately distributed versus being public. And there's a few other distinctions that we can make as we dive in. Make sure you check out the other episode on proof of reserves coming out soon.
Nice. While we're here too, I just want to be clear. So companies thinking about, oh, I've got sort of a regulatory state licensing thing. I need to get a financial statement audit. I'm also interested in, proof of reserves, so I can sort of go directly to customers and give them transparency. The proof of reserves is really not a replacement for a financial statement audit. And in that example I just gave, right, a proof of reserves isn't going to sort of buy you the regulatory ticket on its own for a MTL license. And a private company audit that you use for that MTL license isn't something you're going to want to share with every customer that you have. And so, really, proof of reserves is a supplement, I would say, to existing sort of standards, existing best practices, and sort of goes above and beyond. So,
yeah, and if we think about the evolution of the industry, right? We started this call with SOC type reports. Those weren't always a report that was offered or done or required, but with the collapse of Enron and the creation of the PCOB, these SOC reports started to become more relevant, where regulators said, hey, maybe we should be having a separate report that covers controls and things like that. So again, with the innovation of the industry, proof of reserves seemed like a natural new addition. That, as Noah, you pointed out perfectly, like it's another supplement in that compliance stack.
Yeah, it's a great point, Nick, that you bring up controls, as that's a pretty important area, especially for crypto companies. No, I've heard of the CCSS. I think it's the Cryptocurrency Security Standard. I believe it's something related to controls, but can you help elucidate what the CCSS is, what the goal of it is, who it's ideal for, and who benefits?
absolutely. Yeah. The CCSS, or Cryptocurrency Security Standard, is a standard promulgated by an organization called C4, so a not-for-profit organization that's issued this standard. And it's 100% specific to crypto compliance and crypto companies. And even more specifically, the goal is really around verifying compliance with the standard specific to the management of private key material, or crypto keys, essentially. So these reports are really ideal for or directed at digital asset custodians, exchanges, payment processors, really any company that exercises and manages private keys in order to serve their customers, right? And so obviously exchange, just to be clear here, right, is going to have pooled custody wallets and warm wallets for deposits and withdrawals. And all of these functions are on chain, and they are driven by the use and management of private keys. And so the stakeholders that are benefited here are definitely customers and potentially regulators as well. I was on the CCSS steering committee for a while and helped steward the standard forward a bit. And I think it's a really great and focused standard. And it's a little bit different. It can be provided by CPAs or a certified public accounting firm or chartered accounting firm internationally. It also tends to be a little bit more hyper technical or very specific on the technical aspect. Not so much related to the financial aspect, let's say, of reserves, but actually how are the private keys managed? The private keys that manage those reserves, how are those properly secured, backed up, exercised, etc.? And so typically provided by like a qualified security assessor, QSAs, or the CCSS or the C4 actually has a standard, an education and licensing program of its own. And so there's our cryptocurrency security standard auditors, or CCSSAs, that can provide those types of reports.
Excellent. Thanks, Noah. That's great stuff. So that's awesome. I think that's a great overview. That was 5 different types of third-party assurance reports that our crypto companies and on-chain organizations can look at to investigate, to see if that's right for them. We talked about SOC 1 reports, SOC 2s, financial statement audits, proof of reserves, and cryptocurrency security standard reports. That's great stuff. Before we end today, guys, I do want to ask you guys a couple rapid fire Q&A questions that I know I had questions about, but hopefully you could help shine some light on some of these. So the first one is that I think a lot of companies have questions about, and that is coming back to SOC reporting. So no, we know about SOC 1 and SOC 2, but then for each of the SOC 1 and SOC 2, there's a type 1 and type 2. So that means there's a SOC 1 type 2, SOC 2 type 1. You know, what's going on here? What does the type mean?
Yeah, who did the naming here, or the naming convention, right? Could we have made it any more confusing? No, it's there, like you said, there's a type 1 and a type 2 for each of the reports, SOC 1 and SOC 2. And it's really as simple as a type 1 is a point in time report. It does not cover a period of time, right? And so it just says, hey, as of a specific point in time, these controls were in place. They were suitably designed to achieve the control objectives. That's the technical language. So they're suitably designed to achieve the control objective. And the control objective, right, for SOC 1 is internal control over financial reporting. There's a number of objectives that sort of get you there. And for SOC 2, the objectives are actually the trust service principles or security, availability, confidentiality. Again, so there's a number of things that get you there. But they're not necessarily tested over a period of time. So I think of SOC any SOC report type 1 as like a stepping stone into SOC reporting. It's typically the first report that a company will go for. It is a slightly lower bar because it only tests the controls as of that point in time. The type 2 tests it typically over an annual period, but it couldn't be as short as 3 or 6 months. And so it tests over a period of time. And so the key language there is those controls were in place at the time of the report. They were suitably designed, and they operated effectively over a period of time. And so, if you're a crypto company, typically the way you want to think of this is type 1 is kind of my stepping stone in, and then type 2 becomes my annual cycle. Just like my financial statement audit will become an annual cycle, you layer this into the compliance program and it becomes an annual exercise.
Excellent. Thanks, Noah. So, or I was going to say, if I were going to simplify it in my mind, then it's like type 1, point in time, type 2, over the whole period of time, right?
Okay.
And during my career now, I've seen, a client that has a type 2 will be able to request what's called a bridge letter. And that is something where the audit firm that did the report then came in, took a look, and is basically offering that, hey, these controls that were over a period of time can be relied on to extend, out a further 6-9 months or so, right?
You got to be careful with bridge letters. Bridge letters are actually issued by management. They have the auditor places no assurance and no review, no anything over it. It's basically management saying, hey, the auditor came in, we went through a process, we got this report as a result, and management is telling the customer, nothing has changed in the control environment. Everything that was in that report should be the same, right? So it's sort of a good faith sort of thing. So you got to be careful with those. They're a useful tool for management. They also get potentially some scrutiny by customers, and then the auditors that use the reports might also not even accept them. So don't rely on them too heavily.
Thanks for clarifying.
Yeah.
Thanks, Noah. Excellent. Thanks for the answer there, Noah. Nick, I got one question for you. You can answer. You can take this whichever way you want. But if you were going to say, what is the easiest report to obtain and the hardest report to obtain for a crypto company, which way would you at least direct our listeners to start with, right? It's not going to be the same for every company, but, generally, what would you say?
Yeah, you hit the nail on the head. It could be different for every company depending on the makeup of the founding team and maybe what they prioritize. But the financial statement audit's probably definitely the hardest because, again, most companies, when you talk about disclosures to financial statements, these are notes, right, that expand on the balances. They get into the details of things like debt or equity structure. And companies, while they know what they've done, they don't always have all those written out. And again, the auditors are really going to beat those up. So, it's hardest because it's a lot of time for your team. It gets the most scrutiny, and it's the most invasive. The proof of reserves definitely pop into my mind. To say easy is not fair because these are complicated procedures to pull together all your client liabilities, bundle those up, make sure you've hashed user IDs correctly for the Merkle. Again, no simple lift, but again, it is a very narrow scope where you can just say, look, we're going to carve out this area. We're going to focus on it and get this report done. And so I do think there's a big benefit there that could be tackled a little earlier in the life cycle, or with a little less invasiveness to the overall team of an exchange or issuer.
Yeah. And I know there's a lot of different systems out there that actually help companies comply with some of these requirements. No, I think you've maybe recommended some of these different types of systems. When are they most relevant usually?
Yeah, I think these really come up with the SOC 2 reporting. There's been a big change in that industry over the past 4 or 5 years. Really smart people have developed, SaaS products that essentially integrate into your company's AWS or Google services, cloud accounts. They monitor sort of the tech controls automatically. They can hold policies and help you like automate the policy review, or if a check needs to be done quarterly, sort of reminds the person who's responsible to do the check and document it. These kind of things have really helped auditors do work more efficiently, and therefore the cost of these SOC 2 opinions has come down. So I think that, I would kind of agree with what Nick said holistically, but also, SOC 2, those tech products have made it quote unquote easier. I wouldn't say that these are really anything is easier than the other, right? It's just a matter of some things are slightly more efficient than others.
Excellent, guys. Well, thank you. I think you guys provided a lot of value here today. If any of our listeners want to reach out and learn more about these types of reports, how should they get in touch with you?
Yeah, definitely check us out at the Network Firm. Check the description. There should be a link for the networkfirm.com. There's some resources there, blog materials. Certainly hit the site, sign up, put in your email to get a newsletter and future contact from us. You'll get key resources, even things like tax law updates. There's a whole bunch of stuff that we share that can be relevant to you personally and to your company.
Excellent. And Twitter, LinkedIn, I suppose, as well. Maybe we can leave those in the show notes.
Sounds
Absolutely.
Good. We'll catch all your guys' hot takes on Twitter. Good stuff, guys. Well, thank you so much. I appreciate your time. And until next time.
Until next time.
All right.